Yo, what up, guys? Mr. Solution. This is just a follow up to the last video I did concerning the BTC chart. Okay, so we want us to also look at it to see what it has done so far and then also look at what it is yet to do. And please know that what I'm doing is not intended to serve as any form of financial advice because I'm not a financial advisor. I have never taken any course on financial advice. So, what I'm doing here is for entertainment purpose. I want to educate and also entertain you. Please do not take it as any form of financial advice. Scrutinize whatever information I'll be sharing here, because none of the rules is cast in stone, right? Everything about cryptocurrency trading, everything about analysis is just a game of probability. Please treat it as such and never take whatever thing you'll be learning here as a guidepost to what you'll be doing in the market. All right, so now we're actually looking at the 15-minute time frame. Let me switch to daily. From daily, we now come from the higher time frame. We now come to the lower time frame. So let's start from the daily chart to see what has happened so far, and then also look at what is yet to happen. All right. Okay. So this is the BTC daily chart. This is the daily chart of BTC. Okay. Let me bold in this. Oh. Okay, it's coming up. And also, please, if you are not trading on FTS exchange, I want to tell you that you're leaving many opportunities on the table. And also, I encourage you to make sure you sign up with FTS, because FTS is actually my number one exchange. That's the exchange I'll be using for my trades all this while. Okay, so you could go to the description section of this video, click there so that I can sign up with FTS exchange. Okay, so this is the daily chart. This is the daily chart of BTC. We saw what happened here, right, after the drops and all that, and then we got to this very point. Initially we had, let me remove all these ones, all these embellishments. Let me remove all this. So initially we had this drop here. Okay, we had this drop here. We had this breakdown up to this very level. Actually, in my Telegram community, I had told them initially that I wasn't expecting BTC to go lower than 28k. That I wasn't seeing BTC falling to a low of 28k. The least I told them was that BTC could drop to like 29k, but that 28k wasn't part of the thing. But then we saw that BTC actually went a bit lower than 29k. I think it dropped to a low of what? It dropped to a low of 28,796. Now that was really what made a lot of people to get panicky and all that, and a whole lot of person equally started selling, myself inclusive. When I saw that thing, I threw caution to the wind, and I thought that the bear market was actually taking over. And also, another thing that made me feel that maybe we are descending to the lows was what I saw on the 50 EMA and 200 EMA. I thought I saw a death crop, which actually looked like it. Look at this now. Look at this. You can see that this yellow one, this golden one, okay, this golden one is the 50 EMA, whereas the white one is the 200 EMA. So I kind of saw this thing coming close, like, right? I saw it get touching. So it was closer than it currently is that yesterday. So the only thing that came to my mind was that, oh man, that this death cross is about to occur. And look at it, actually crossed. Just take a deeper look at this. You can see that it's actually crossed, but right now it's beginning to reverse, right? It's beginning to reverse. The 200 EMA is kind of trying to go above the 50 EMA, right? You can see, just look at it closely. You see what I'm talking about? That at this point it kind of crossed it. The 50 EMA went below this 200 EMA, kind of crossed it, but right now the 200 EMA is actually going above that 50 EMA. So in other words, that death cross is about to be reversed, right? But remember, like I said, this is not cast in stone. This is not I'm not telling you guys that the bull market is here or anything. I've decided that the only thing I'll be doing right now is to trade what the chart is telling me. I do not want to be bullish, I do not want to be bearish. I only want to focus basically 100% of what I'm seeing on the chart, and what I'm seeing on the chart is only what I'll be sharing, right? So right now we can see that this 200 EMA is actually trying to go above this 50 EMA. In other words, that the death cross is about to be reversed, so there is a probability, there is no certainty here, I'm not speaking in absolutes, right? So there's a probability that this death cross is about to be reversed. So we got this fall to this region, we got this fall to this 29k, but then we also went lower than that. But then when I knew that something big was gonna occur, that a reversal was imminent, was when I looked at the 4-hour chart, and then I saw 2-hour chart actually, and then I saw a heavy rejection. Let's now switch to the lower time frame to see how that played out. Let's go to the lower time frame to see how that played out. Okay, so coming to the lower time frame here. Okay, let's go to 4-hour first. 4-hour time frame. Okay, coming to the 4 hours. All right, coming to the coming to the 4 hour. Let me also expand this. All right, coming to the 4 hours, we saw this. We saw this breakdown. Like immediately this thing descended to 28,796. It immediately got rejected, right? We immediately saw a sharp rejection, and then this sharp rejection was now followed by another green candle that formed above the close, right? That was actually when I knew, to all intents and measures, that the bulls were back, right? So I saw this green candle that forming above this this rejection here, the close of this very candle. I saw this bullish candle forming, and also far, market has been going up, it's been going up, and all that. Okay, so that's it for the 4 hours. And then let's also go to another lower time frame. Let's go to 1 hour to also see how the 1 hour chart played out. Okay, coming to the 1 hour, we saw this. Okay, the 1 hour chart, let me also bold in it. All right, for the 1 hour chart, this is what we have here. This is what we have for the 1 hour. Okay, we got a kind of an inverse head and shoulder chart pattern. Okay, even though it didn't really display very well here, but if you go to another lower time frame, like the 15 minutes, you will see it well formed. Okay, so we got this inverse head and shoulder form. This is the head, this is the shoulder, first shoulder, second shoulder. So this is an inverse head and shoulder. And when you see an inverse head and shoulder in a chart, what does it mean? It means that the chart is gonna, the movement is gonna favor the upside. Okay, so that's when I noticed this this inverse head and shoulder on the 1 hour. I now went to the lower time frame to also see how it plays out. Before then, let me remove these indicators, okay, so that we'll have a cleaner chart. Okay, so let's go to the 15 minutes time frame to also see how it's been working. All right, so this inverse head and shoulder, you can see it clearly on 15 minutes time frame. That's when where you can see it very well. Okay, for the inverse head and shoulder pattern, it showed up very well in the 15 minutes time frame. Okay, so this is the 15 minutes time frame charts. This 15 minutes time frame, you can see this, from here we descended to this very place, then there was a rejection at this point. We got a rejection at this point, 28,796, and then so far price has actually been going up onto this very, it equally got to this very level where this one was before it started going down. Then it kind of corrected a little, and then there is this breakout. So what am I expecting from here? The rule of an inverse head and shoulder pattern is that if you want to project where the move will get to, it's very simple. You just check the distance between this this neckline and this head. Check the distance between the neckline and the head. That should give you the projection of where the move will get to. All right, so far, if we are to do that, let me put this here. So let me put this here. Okay, so we have something like this. This is the head, and then we have the neckline here. Okay, we have the neckline here. This is the neckline, this is the head. So taking this up, putting it here, from where the breakout occurred. So what it means is that we are actually expecting a move of BTC to somewhat around 36,000. So the possibility of getting to 36,000 is very much in the picture. Okay, so because that is the rule of inverse head and shoulder, the distance between the neckline and the head should give you the projection of where the price will definitely get to. So that's what we are actually having here. We saw this breakout occurring here, and right now the market is kind of is ranging around here. Let's also do a little analysis to also kind of hypothesize on where we think the breakout will occur after this little consolidation that we are getting currently. Okay, so let me do a little analysis using trend lines and all that. Okay, so using trend lines, I'm gonna pull it up. I'm gonna pull it up from here. Okay, the trend lines. Okay, we have something like this. Okay, we have something like this. So what it means is that currently the market is really ranging, like, right? This is just a first level consolidation, which is actually normal. It's very normal for this thing to occur, right? This is just a normal range that happens whenever there is a breakout. It's a normal range that happens whenever there is a breakout. So we see this ranging around here. Okay, so this is the current resistance and this is the current support. The resistance, you know, if you look at it very well, you see that at one point market got to this high. Let me embolden it also for clearer view. Okay, so you see that market got to this high, came down again. So what it means that this current place has been serving as, this is the current this is serving as a resistance, right, whereas this is serving as the current support. Okay, so we keep monitoring this. Okay, so it hit this, it got to this top and then came down again at this current level of this is the current level of support now. And then what is happening, we can see that this is going up. All right, so I'm actually expecting something. I'm expecting that if it keeps ranging, a time will come when it will have to break out. Now this is under normal circumstance that we are anticipating that this breakout is going to be on the upside, because this is the rule of an inverse head and shoulder pattern. We are not expecting a breakdown, so we are expecting somewhat like that. After this range, I don't know how long this range will last. I cannot time the market, right? I can spend time in the market, but I can never time the market. Okay, so I don't know how long this will continue to range and consolidate, but what I know is that according to the rule of inverse head and shoulder pattern, there is definitely gonna be a breakout. So what is happening here is normal. This is just level 1 consolidation. So after this consolidation, there is definitely going to be a breakout, and that breakout, according to the rule of inverse head and shoulder, the breakout should do what? Favor the upside. But then remember that what we are dealing with is a case of probability. Analysis is a case of probability. Nothing is casting. So I'm not saying it must break out to the upside. So that being the case, what it means is that I'm also going to consider the fact that what if I'm wrong, right? What if I'm wrong? What if instead of market going up to the upside, decides to go to the lower side? So that brings to the point of what? Using my stop loss. Okay, so using my stop loss. So in this case now, I should be using a stop loss because there's a possibility of this thing not breaking up to the upside. Even though, yes, according to the law of inverse head and shoulder, that this market should break out to the upside. So in a situation whereby this market doesn't break out to the upside, I should be having my stop loss. And where should my stop loss be? My stop loss should be at the point. Alright guys, so if I am to put my stop loss, where should my stop loss be? Okay, so to get where my stop loss should be, let me exit this full chart. Okay, so if I'm to put my stop loss, I will be having my stop loss somewhere around the point where my setup is invalidated. Okay, so it should be something around here. So something around here. Okay, something around this 33,000 or thereabouts. So what it means is that if eventually this this setup falls, crashes, so what it means is that this has been defeated. But now, you know, there's a probability of this setup coming down again now and reversing it. We've seen it happen so many times. So what will now be the case? What should I do? Right, it's now up to me. Maybe if I get stopped at, I could decide to enter back again. Right, I could decide to enter back again. Or maybe if I get stopped, I could just decide to watch it to see how it goes. Maybe I get stopped at and then decides to go back to my favor. It's very much possible for that to do, for me to see that. But then if I just want to be more risk averse, like expose myself to more risk, I could decide to bring my stop loss something low, somewhere lower, so that I know that if this thing gets defeated, if eventually market, you know, goes above this and then comes down to this very level, that nothing is stopping it from continuing the downtrend. So I could decide to put it here. That depending on my risk tolerance. You know, this thing depends on, you know, how you understand risk and then the amount of money you have on in that trade. Okay, so if I just want to be more risk averse, like I would just want to, you know, expose myself to more risk, sort of. But all this thing depends on the capital I have in the market and then my position sizing and all that. I could decide to put this stop loss here. So what it means is that if this market actually, you know, goes below this and then starts coming down, that immediately, if it eventually gets to this point, that nothing will ever stop it from going down again. So I just know that this setup has been totally defeated, because if I decide to put this stop loss somewhere around here, there is a tendency that if this thing breaks down, of course, it could come to this very place and then start going up again. We've seen that happen so many times. But then this is the place where I know that if this price eventually gets to that, every of my setup is 100% defeated. If the price eventually gets here, that nothing will stop it from descending to this very low again. Okay, so if you look at other charts, other coins, so to say, they are all borrowing a leaf from what BTC is doing. All of them are following BTC bumper to bumper. Whatever BTC is doing, that is what majority of them are doing. You can just, let's look at Solana. You can see what Solana is doing. You can see Solana is actually dovetailing what BTC is doing. So you can see that. So virtually, you see the inverse head and shoulder of Solana. Look at it. You can see the inverse head and shoulder of Solana. This is the shoulder, and then the head, and you can see that all of them are following what BTC is doing. So you can just decide to pick one coin, because since all of them are following what BTC is doing, or you could just decide to stick with Bitcoin, because that is actually the #1 coin that decides what every other coin is doing right now. All right, guys, I hope this video has been educative enough. I hope it's been insightful, and if you love with my content, you love what I'm doing, kindly hit the subscribe button. You could also share the video to your friends, and also if you're looking for a community where you can join to get daily insight about the cryptocurrency market, I have a Telegram channel where I update people regularly about my outlook, or what I'm seeing, or what I'm learning from the market. Right, I'm not a professional, I'm just a student of the market. Right, so you could join my Telegram channel. I'll be leaving the link at the description section of this video. All right, guys, so till I come your way again, I remain your man, Mr. S to the O to the L to the U to the Shaw, Mr. Solution. Hands ahead. Salute.